let's talk about the Federal Reserve, which whose action caused the second move higher in the euro dollar. First and foremost, as you all know by now, the Federal Reserve basically announced a third round of quantitative easing. They revved up the printing presses, and in the case of the Federal Reserve, they actually do, create new money. Obviously, it's not like this. They don't necessarily, roll out the printing press and start printing out new dollars. But essentially, that's what they're doing. They're flooding the market with new U.S. dollars, which is why the U.S. dollar performed so poorly, because they're creating more dollars in the market. So what did we get? What we got from the Federal Reserve was the following. Number one, $40 billion per month with no end date. That is where the unlimited comes in. No end date. The fact that we have no end date means that the Federal Reserve will keep on being in the market until they need to stop. And this is where, once again, I have to say that you cannot underestimate the power of and the cycle of the word unlimited, because investors clearly like what they see. They also pledged to do more if the labor market doesn't improve. They extended their low rates pledge from late 2014 to mid-2015. And they came out and said to us, even if the U.S. economy recovers, we are going to keep on buying, or at least keep monetary policy easy for a considerable time after the recovery. So this is a huge menu of initiatives that they launched last week. And one of the big reasons why we had this nice risk-on rally, and we had such a nice, powerful move in the market. Some of you are asking about whether this risk-on rally will continue. I will address that, but I want you to appreciate the significance of what the Federal Reserve did. This represents a huge shift in the level of aggressiveness by the U.S. Central Bank. We had QE1, we had QE2, this is QE3, and it has and it should continue to have a large impact on the market. In order to understand the current market's price action and what could unfold, going forward, we have to take a look at what really happens when quantitative easing occurs. So as I mentioned earlier, the central bank does not roll out the printing presses and actually physically, print more U.S. dollar bills. Instead, it's an electronic action these days, and they just basically add a few zeros in their bank account, and poof, like magic, money is created. So then they use this new money to buy government bonds or assets of other financial firms. This time the focus is on mortgage-backed securities. So they use this new money to buy mortgage-backed securities in the hopes of keeping the yields low, and in the hope of that the companies who get these new monies into their hands will lend to consumers or businesses and buy other assets such as bonds. And they hope that this will create a virtuous cycle of spending and investment. The impact on QE is the following. It is exactly what we're seeing right now, which is that QE is really positive for stocks. And the reason why it's really positive for stocks is because, there's a flood of cheap money into the market. So it becomes much more inexpensive for these companies to borrow, and it basically creates a floor in the bond market. It is very negative for the U.S. dollar because they're effectively devaluing the value of the dollar and, kind of tapping the rise in, U.S. yields, or at least actively pushing U.S. yields lower, making it less and less attractive to own U.S. dollars. Now, because it's good for stocks, it's also good for the risk appetite of the markets. Because if you think about it, the central bank flooding the markets with liquidity. They're basically, buying up all these different things, making, your credit card interest rates lower, making you're making any sort of home loans that you may have, the interest rate lower, if you have variable mortgages, making, the cost of borrowing for companies lower. So all of these things is making it a very favorable environment for companies and consumers. And in that environment, it makes investors optimistic, which is why we have such a nice risk-on rally. And for the U.S. dollar, and what a good example, a good parallel is imagine that if you have one Babe Ruth baseball card. And for those of you that are not Americans, Babe Ruth is one of the most famous baseball players in the world. If you have one Babe Ruth baseball card and it was worth $100, for example, if suddenly, 4 other Babe Ruth baseball cards appeared on the market, your one Babe Ruth baseball card would be worth less than the $100. So this is why we're seeing the movement in the U.S. dollar, where originally we had X amount of U.S. dollars. Federal Reserve created money flooding the markets with, XYZ in U.S. dollars, and that's why the U.S. dollar is fallen in value. So the U.S. dollar has fallen quite a bit, but what's interesting is that quantitative easing itself is not always negative for the U.S. dollar. And if we take a look at how the euro dollar and dollar yen performed in QE1 and QE2, we can see that. This is a chart of the euro dollar, and the arrow pointing is when QE1 was announced. And what you'll see is, actually in the first, week after QE1 was announced, we actually saw a rally in the U.S. dollar against the euro before we saw a parabolic move higher. In dollar yen, we saw a much more consistent move lower. Now, what I do want to bring to your attention is that at the time, dollar yen was trading at a much higher level at 95. But when QE1 was announced, we saw a little bit of a consolidation in the day of QE. Obviously, it was very negative for the U.S. dollar. In the days that followed, we had a little bit of a consolidation before a much more serious breakdown in dollar yen. QE2, interestingly enough, actually marked a near-term bottom for the U.S. dollar. Because when QE2 was announced in 2010, we did see the dollar fall on the day of the announcement. But in the month, I would even say the month, plural, that followed, the dollar actually rose really strongly against the euro. And the same story was seen in dollar yen. Basically, in the month that followed quantitative easing 2, we actually saw a really nice rally in dollar yen. So right now, what are we seeing? Right now, what we're seeing is we're seeing the U.S. dollar sell off, but it's selling off against everything except for dollar yen.